Hi, this is Jeffrey Kurt Financial Group, and today is Monday, September 9, 2024. Take a quick look ahead at the week, and there's two important data releases. CPI, Consumer Price Index, on Wednesday, PPI, Producer Price Index, on Thursday, and they are both related to inflation, one at the consumer level, one at the manufacturing and production level, and they'll be closely watched by the Fed and by the markets for any signs of relief in the rate of inflation. This month and the September report, which is August's numbers, and the October report, which will be September's numbers, pretty easy comparisons. So there's a possibility of having a very dovish number, which would be music to the ears of those calling for more rate cuts and cowbell from the Fed. So those two things are the big important economic stuff. Not much in terms of earnings. There are some companies reporting earnings. Nothing I don't think that's going to be too market moving, but we will see. And now looking backwards from instead of forward, the last week the stock market had a terrible week. It was only 4 days, and in those 4 days, the S&P lost 4.25%, the Nasdaq was down 5.77%, and the Russell lost 8.9%. So a very weak start to the month of September, much like we had in the beginning of August, and the markets did recover in August. We'll see what happens here in September. Next week, looking back ahead again, is that the Fed is doing their interest rate cut. Their meeting is on the Tuesday, Wednesday of next week, and expected, as they're going to cut interest rates. It's the debate is over whether it's going to be 25 basis point cut or a 50 basis point cut. But they, that's going to be that week, that Tuesday, Wednesday's the announcement. On Friday of next week, the 20th, there's a big expiration of option contracts, futures, and options on futures. And the positioning right now is that it could be pretty volatile going into that. I mean, that the positioning for dealers and traders and like that will change. But right now, it does indicate it could bring in some more volatility. Let me finish up with an email that I got on Saturday from Apollo Management, which is a global, huge asset manager across very many, asset classes and markets. And in it was 10 reasons why we're going to go have a soft landing and avoid a recession. We've had a lot of discussion about recessions and some commentary that we're already in some recessions and like that. But a couple of the items they had were that unemployment was down in August. That's number one. Wages were up in August, helpful to the consumer. Debit card transactions have been robust recently. Retail sales have been pretty good. Defaults and weekly bankruptcies has seemed to peak. Again, these are kind of maybe cherry picked, and maybe these are just one time in history, and that the trend will continue to weaken. But wanted to pass it along. And anyone looking for that email, contact me. I'll forward it over. Pretty interesting stuff. Thank you for listening, and we'll be back on later this week. Thank you. Goodbye.